Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Be impeccable with your word. Express your love. Impeccability of the word can be measured by a level of self-love. If you love yourself, you'll express that love in your interactions with others, and that action will produce a like reaction. Market-wise, let's take a look at it out here. We had the Dow Industrials down 27, NASDAQ off 18, S&P's flat. Bottom line, folks, is that you got to a higher high today. You had a contraction of volume. I expect they're still going to go higher out here tomorrow. In the NYSE, we did 832 million shares versus 972. And we could take a look at the NASDAQ composite. Composite did 1.9 billion versus the 2.3 of yesterday. Now, that being said, what you also have is this, is that if we go take a look at this S&P, what you're going to see is that yesterday, bottom line, you had an expansion of volume. That expansion of volume, however, was coming into all your downdrafts, so you still had lighter volume. What we had out here today, you got to a higher high, had the contraction of volume. SPY hit 273. I expect what you're going to see out here, we're going to get up to somewhere about 277. You know, we'll see if it can get to the November 7th swing high, which is at 288. The closer you get to this number, the more I expect you're going to see, number one, your contraction on volume. And, you know, we'll see how the rest of these indices set up. Time-wise, it's coming out pretty good. Meaning specifically is that what we just had here is that you had Powell come out yesterday at the New York Economic Club. He was talking about the aspect that he thought that neutral rates were right under neutral rates right now. You had the Fed fund minutes come out today. They shook that off. Bottom line, same type of setup. Things are getting more dovish. And then what do we have? We're coming into window dressing, which basically kicks off right now. We get the end of the month tomorrow. You get the first couple of days of the month. This is setting up for like kind of like next Tuesday or Wednesday that you're going to be basically more than likely having lower prices coming at you. We go take a look at the NDX 100. That is set up the exact same way. We got to a high today. Got to 169.26. You're at 168.15. This can get up somewhere about the 171. We'll see whether it can make it to the 175, which was the high that was generated on the 7th. Gold contract, all the futures, basically, we're rolling in the futures right now. Well, not all of them. Bottom line, we're rolling in gold. We're rolling it in the bonds. If we go over to gold, what you're going to see in the gold contract, we're now on the February contract. This little baby, you know, bottom line, had some good volume out here today, 228,000 contracts. Got to a price point of 1234, laid out at 1228. This one's higher price. You know, it's going to be intriguing here. Now, we've been here a long time. You know, you can make the case we've been, you know, we established the low on August 16th. That was the last time, and that's why that August 16th time frame inside the dollar is so important. It was actually August 15th on the dollar. You can make the case that we've been actually out here since July 18th. July 18th, we're still at 1227 inside the gold market. The cool thing here is that that's a long consolidation. And what we did do is that we got that monster sign of strength on the 11th of October. That broke the downtrend. Now, if I bring this back and show you this, you know, this is always a patience game in the market in general. When you have a monster sign of strength, you know, which we did, bottom line, you're going to be able to see how that basically changed the structure of the downtrend, because this is quite a downtrend in the gold market. We go back to 2018, April of 2018, you're at $1,365. You go straight down to 1161. That was August 17th. You move sideways for 7 weeks, and then you have the nice sign of strength. We tested the sign of strength 2 weeks ago, rejected it, had lighter volume on the rejection. Now you're building cause for the next leg up. The gold contract, it shouldn't be that hard to actually get into the 1241 to 1250 area. The real kicker is going to be, do you do that with conviction? And that's what you want to be looking for, folks. You want to be looking for moves with conviction if you're a bull. If you're a bear, you want to be looking for moves without conviction. Conviction is wide price spread, accelerated volume. The reason I'm saying that you should be able to get in there pretty good, pretty easy, is that there's not really nothing in between this because we came down so heavily and so fast. Now let's switch right over into the silver contract, because silver continues to have a problem. Silver right now, that was down 0.5% today. No big deal there. But silver, different animal. Hasn't been able to really get the juice behind it. Silver actually got under its low on the 14th of November, then decided that I'm not staying here. Now, what we have out here today, because of the roll, you get some good volume. And we'll see whether silver can get up into this area of $15. You know, we want to see a sign of strength inside that silver market. Notes and bonds, hey, it's like a broken record. I'm like a broken record out here, I can tell you, folks. The amazing part, they both want higher price, lower yield. And, you know, fundamentally, that's been happening for, well, technically that's been happening for a long period of time. You heard me out here every single day. Now what's going on fundamentally, it's going on, the note and bond market has been correct in the aspect of, regardless of what the Fed had been saying in the last few months, you can see that the 10-year bottom line, its low is October 8th. So we're talking about almost 2 months ago. That low was at 117.23. When that low was coming in, you had the 10-year was trading on a yield basis of 3.27. Well, we're at 3.02. We got under 3 today, and the way this market is trading, it looks to me that basically we're going to be getting back into about 2.8. That's going to be a shocker in the marketplace. You know, the market should love it. That's the bottom line. The way that I suspect we're getting there, the market won't like, though, because I suspect we're going to be getting there when this leg starts coming downtown again inside the S&P. And then when we wrap the whole baby together, I suspect what we actually have out here is one monster consolidation. And, you know, we'll see how long we're going to stay in that consolidation. You know, thus far, bottom line, it looks like we've been in this consolidation since the beginning of the year. So this would be 1 full year at the end of this year if that's what we're in. And guess what? You can stay in a consolidation after the type of run we have, you know, at least a couple years. Stay right there, folks. We're coming back with some numbers.